What's up guys and welcome back to Wall Street Millennial. Today we're going to be looking at some of the biggest gains and losses on the Wallstreetbets forum of the past week. This week, a lot of people have made a lot of money on plays on GameStop, AMC, and BlackBerry, but some people have lost money too. By looking at what they did and how their trades played out, we can learn from other people's successes and failures. First off, we have a truly sad story from user Summation Kid, who finds himself with a negative $300,000 balance after getting screwed by his broker. He lives in Canada and uses the Royal Bank of Canada as his broker. At market open on January 28th, he thought he would buy 100 out-of-the-money calls on GameStop with a strike price of $5.70 expiring on February 5th. This was definitely a risky bet as the calls were more than 100% out of the money. The calls cost $100 each, so the total investment would be around $10,000. This was a manageable amount of money that the OP was willing to risk. Unfortunately, he forgot that each contract represents 100 calls and accidentally bought 100 contracts, good for 10,000 calls. They closed at the price of $110 each for a total cost basis of $1.1 million. This blunder was so great he thought it was a glitch on his brokerage account that allowed him to do this. But he admits he was operating on 6 hours of sleep, so it's possible he made the mistake on his own accord. He didn't have $1.1 million in his account, but somehow the order went through anyway on margin. Unfortunately for the OP, this all happened on the same day that Robinhood banned buying of GameStop and the stock tanked more than 70% intraday. This caused his calls to tank in value. He tried to sell immediately when he realized his mistake, but his brokerage account was down. By the time the system was back up, GameStop crashed and the broker initiated a margin call, liquidating his entire position at the bottom. To add insult to injury, right after this margin call, GameStop started a strong rebound. He now has a negative balance of $318,809 Canadian dollars on his account that the broker charges him an exorbitant 21% interest rate on. This equates to $172 a day in interest expense alone, which he has no way of being able to pay. While many Wallstreetbets users have achieved life-changing gains on the GameStop saga, this user was one of the losers and lost more than everything on a failed YOLO. While the OP bears some of the responsibility, it's ridiculous that the Royal Bank of Canada allowed him to take on so much leverage accidentally. If this post is true, the bank bears a large part of the blame for this disaster. The OP said he called customer service to see if there is an equitable way to resolve this issue. They say they escalated the issue to upper management, but he is not hopeful that they will do anything to help him. This post should be a warning to us all. When you initiate an options position, you are potentially putting a large portion of your net worth on the line. So it's always worth it to triple check and make sure you know what you're doing with each trade. Next up, we have the Robinhood user LMK4 with a very respectable $62.8 thousand gain in the past month, almost all from the GameStop saga. He only started out with $300 in his account, then made $8,000 on the second wave of the short squeeze. The haters then told him that his $8,000 gain would evaporate, but he exercised diamond hands and turned that 8K into 68K. That's enough money to buy a brand new Porsche convertible. Even better, a significant portion of that money probably originally came out of this guy's hedge fund. This gain was cheered by the comment section like a victorious soldier coming home from war. User Septum comments respect, while others comment a word that conventionally refers to mental difficulties, but on Wallstreetbets is an affectionate term. However, two trends dominate the comments section. First is discontent that the user did not practice diamond hands in the end and has now sold his GameStop position. The second is an overall disapproval of using Robinhood. User SparkA1 says congrats, but to transfer the gains out of Robinhood and never go back. DeathKite says to save the majority of it, put 10% of it in a different broker, and donate 10% to charity. This is just the latest example of the generosity shown by Wallstreetbets. Earlier in the week, Chamath Palihapitiya made hundreds of thousands of dollars on the GameStop run-up, and announced that he would be donating the entirety of the gains to the Barstool Fund, a charity set up by the founder of Barstool to support struggling small businesses crippled by the pandemic. It seems like this person has taken his gains on GameStop or whatever other name he traded. Whether or not you agree with his decision to sell, one thing is for sure. It is a clear example of the massive transfer of wealth from the financial elite to the people. Next off, we have user Ramen Shaman 007, who posted loss porn on Palantir options. He owned calls expiring on January 19th, ranging in strike price from $42 to $55, with a total cost basis of around $18,000. Shares of the company closed at $35.18 on the 29th, rendering all of his calls worthless. Shares of the data analytics company have performed strongly since its direct listing in September for $10 a share. He extrapolated the strong gains going forward, but unfortunately, the lowest strike price of $42 proved overly optimistic. If he had chosen a lower strike price, he could have made a lot of money depending on when he bought. Next, we have an example of what happens when you paper hands on GameStop and sell out to buy a flashy new Tesla. User Matterall posted a screenshot of a confirmation page for buying a brand new all-white Tesla Model S. Normally, this would be a huge victory lauded by the Wallstreetbets community, if it weren't for the current circumstances. This trader made these gains by making a short-term $31,000 YOLO on GameStop. On January 19th and 26th, Matterall bought 2 tranches of 250 shares of GameStop at $40 a share and $85 a share, respectively. Since the 19th, the price of the stock has shot up 700%. The real play would have been in options, but even with just stock, this was good for a $121,000 or 400% gain on the investment. But the comment section doesn't take too kindly to his paper hands. Big C Nugget says to downvote this paper-handed mentality, which clearly people did, as the original post only got upvoted 38% of the time. The next comment says that although Papi Elon would be proud of the OP making money off the establishment and spending it on a new Tesla, it would have been much better if he had held. Salad Milk 1 says that he was supposed to hold instead of sell, while Floor Paula says that GameStop still has the potential to reach $10,000 a share. The popular opinion on the Wallstreetbets comment section seems to be that people still want to hold the stock, and news of the short sellers covering their positions or of the GameStop trade running out of steam, according to user Wadanovich, is a distraction. This is just another example of how Wallstreetbets thinks of people who have already sold their GameStop. I am not suggesting either side, but I suggest you do your own research to decide for yourself what investment strategy makes sense for your personal situation. Next off, we have user BigDChick.com, who lost $18,000 betting against Wallstreetbets meme stocks GameStop and AMC. He bought $9 strike puts on AMC, as well as 75 and 120 strike puts on GameStop, all expiring on January 29th. GameStop closed that day at $325 per share, 170% above his highest strike price. AMC closed at $13.26 a share, or 47% above his strike price. This caused his puts to expire worthless, and he lost his entire $18,000 investment. Unsurprisingly, fellow Wallstreetbets users are unsympathetic to his loss, saying he was not on the right side of history by siding with the hedge funds to bet against these heavily shorted stocks. User Benjamin Fernwood also points out the low IQ of the OP. On January 29th, his portfolio decreased in value by $10,165, or 38.59%. He blurred out his total portfolio balance, but this number can easily be calculated based on his percentage loss. Just take the $10,000 loss and divide it by 38%. This comes out to $26,431, which was his starting balance at the beginning of the day. After this loss, that brings his current account balance to $16,176. To make matters worse, he claims that the money he lost was from his college fund and that he will now be forced to work at Burger King for the rest of his life. This just goes to show, never buy puts on Wallstreetbets meme stocks. Alright guys, that wraps it up for this video. If you hold any GameStop, AMC, or BlackBerry, let us know in the comment section below if you plan to hold onto it or if you plan to buy or sell. Make sure to hit the like and subscribe buttons and check us out on TikTok, link in the description below. In the meantime, thank you guys so much for watching. Wall Street Millennial, signing out.